Welcome back to the Stock Market Summary Series. Today, well, the market mostly hit the pause button.
Yeah, pretty quiet overall.
But not before the Federal Reserve dropped a bit of a surprise that I think caught some traders off guard. And while the big indices were flat, one actually broke ranks, found solid support right where we thought it might.
Mm-hmm.
We're going to unpack what this means for your trading day and how it fits into the bigger picture. So stick around.
Definitely worth digging into.
Oh, and hey, before we jump in, if you find these daily summaries helpful, do us a favor and hit that like button. Doesn't cost you anything, but it really helps us out. And click subscribe so you never miss a beat. You can always unsubscribe later if it's not for you.
Yeah, absolutely. And just that quick reminder, nothing we talk about here is specific buying or selling advice. It's all general market commentary and trading education.
Exactly. So let's talk about that pause. SPY, DIA, QQQ, pretty much flat, right?
Yeah, dead flat. SPY just sort of hovered around that $600 level we've been watching. And QQQ, well, that quiet consolidation continues. It follows what we flagged yesterday, maybe a prelude to a sharper move.
Right, that calm before a potential storm feeling. And DIA.
DIA struggled again, couldn't clear its 200-day and 20-day moving averages, much like we saw yesterday when it sold off right from those levels.
Okay, but the standout, the one that didn't get the memo, IWM, small caps.
Ah, yes, the IWM. It actually climbed up, 0.53%?
Yeah, 0.53%. And it found strong support right at its 20-day moving average and that $208 level, exactly as we kind of mapped out yesterday.
Nailed it. That $208 level was key. It really shows how identifying those support zones can work even on a flat day.
It really does. So what does that tell us? Small caps finding a bid while the big guys sit tight.
Well, it highlights how selective the market is right now. And if you connect that to, say, financials that XLF, still stuck. Yeah. Right around 50-50 cents.
Still in that tight range.
Exactly. And that's not just flat action. But banks often lead, right? So them being stuck, especially with this Fed news we'll get to, it signals some underlying caution,
Makes sense. And Apple. AAPL stayed below its key trend line again today, second day.
Right. We flagged that yesterday. It hasn't flushed lower yet, though, so that battle is still on.
Okay. Consumer staples showed some resilience, but the VIX held steady. Still reflecting that cautious mood, maybe partly the Middle East tensions.
Yeah, I think that's playing into it. That caution makes the Fed's move today even more impactful.
Okay, let's get to it. The curveball. The Fed cut rates.
They did. A surprise 25 basis point cut. Brings the target range down to 4.0%, 4.25%. Honestly, pretty unexpected. Most of the market seemed priced for a hold there.
Wow, yeah, okay. And the dot plot. What's the new outlook?
More conservative now. They're projecting only one rate cut for 2025. That's down from two previously.
One cut. Why the change?
Persistent inflation concerns. They're still seeing core PCE around 2.8% this year. And Powell, Chair Powell, he also mentioned cooling consumer demand and, interestingly, tariff risks.
Cooling consumer demand. We saw that in the data too, right? Retail sales.
Yep. Dropped 0.9% in May. That was worse than expected and really amplifies those spending concerns we talked about yesterday.
And there was other data too.
Yeah, industrial production fell 0.2%, which kind of aligns with that cautious view. And new housing starts hit a 5-year low, so reinforcing that sluggish housing market picture.
So mixed signals all around. Powell's comments, the surprise cut.
Yeah.
Markets are probably still digesting this. Tomorrow's jobless claims will be important.
Very important. Lots to watch.
By the way, folks, if you got a stock you're watching or a question about these markets, drop it in the comments. We might just cover it in an upcoming summary.
Yeah, good idea. Okay, shifting gears a bit. Crypto, Bitcoin.
BTC dipped a little today, down about 0.57%. Still hovering near that 50-day moving average, though.
Right, and we flagged that yesterday as pretty critical support. Bulls really need to defend that level to keep that symmetrical triangle pattern in play.
Got it. And metals, gold.
GLD fell about 0.5%, 0.54%. It's pulling back further into the apex of that ascending triangle we've been watching. Kind of follows that bearish death hook warning from yesterday playing out.
Okay, so that signal worked out. What about silver? Had a big day yesterday.
Yeah, SLV dropped back today, down 1.39%, giving back some of yesterday's 2.15% surge. But it's still holding above $33. That's a level we've been keeping an eye on since it ran up from $30.
Okay, so a pullback, but maybe constructive still.
Possibly. Days like today, seeing IWM find that support or Bitcoin testing its 50-day, it really hammers home how important understanding these technical setups is.
Absolutely. Recognizing consolidation like in XLF or reacting to trendline breaks like Apple, that's crucial stuff.
It is. And that kind of practical wisdom, particularly around, managing risk and tailoring strategies for choppy markets like these, well, that's exactly what the Grok Trade Mentorship program dives deep into.
Right. The coach is there with, over 40 years combined experience. They guide you through these kinds of market dynamics.
Exactly. It's a serious program, very supportive, helps you build the skills and confidence to handle whatever the market throws at you. They even support you until you recoup the investment.
Good to know. Yeah, let's do a quick recap of the numbers then.
Sounds good. So SPY, DIA, QQQ basically flat. IWM, the outlier, gain of 0.53%. Bitcoin down 0.57%. Gold fell 0.54%. And silver slid 1.39%. All this as markets tried to figure out that Fed surprise.
Got it. And hey, one last call. Have a ticker you want us to break down? Let us know in the comments. We always like seeing what's on your radar.
Definitely.
So looking ahead to tomorrow, what's the real reaction going to be? The Fed's giving these mixed signals on rates, on inflation.
Yeah, and will consumer demand keep cooling off? How does that reshape trading strategies for the next few weeks?